Bismillahirrahmanirrahim. This is the fourth video on accrual accounting. This video explains the process of closing the books. It describes the content and purpose of a post closing trial balance. It states the required steps in the accounting cycle. And finally, it explains how to prepare a worksheet. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. In this video, we are going to talk about closing the books. That is how we prepare closing entries, how we post them, and how we prepare a post-closing trial balance. We will also explain how to use a worksheet, the steps in preparing the worksheet, how to prepare the financial statement through a worksheet, and how to prepare the necessary adjustment entries in this regard. Now, please refer to the video Accrual Accounting Part 2 and watch how a company creates an adjusted trial balance, lists all the accounts balances as such. After adjusting entries are journalized and posted, a company creates an adjusted trial balance which lists all the account balances after adjustments. Its main purpose is to ensure that the total debits equal total credits after the adjustments. The adjusted trial balance contains essential data for preparing accurate financial statements. After preparing the adjusted trial balance at the end of the accounting period, companies transfer the temporary accounts account balances to the permanent stockholders equity account through the preparation of closing entries. So understanding the closing entries help us to know how temporary accounts and retained earnings work. Temporary account means we close them at the end of the accounting period. Anything that goes on the balance sheet do not close as they are the permanent accounts, while all the remaining accounts are closed. We don't close permanent accounts. So anything that goes on the income statement or the retained earnings statement are closed. However, we don't close retained earnings because the ending retained earnings balance goes on the balance sheet. So let us look into the closing process. First of all, we are going to close the revenue account. So now this ledger is from our previous video, so you can look into the whole exercise. It is in continuation to the previous video. So in order to close the balance of the service revenue, it should have a zero balance. Right now it has a credit balance of 10,600, and to make this balance zero, the service revenue account should be debited by the balance amount, that is 10,600. Next, we are going to close all the expense accounts, and we have the salaries expense, we have the supplies expense, we have the rent expense, insurance expense, interest expense, and depreciation expense. So we have six expense accounts, and each one of them is having a debit balance. So in order to have a zero balance for the expense account, each expense account must be credited by the balance amount. So for the salaries, it must be 5,200. Supplies expense should be credited by 1,500. Rent expense 900. Insurance expense 50. Interest expense also 50. And depreciation expense will be credited by 40. So in order to close the balances of expense accounts, it should have a zero balance. And in order to do that, these accounts should be credited with the balance amount. Now, please note that we have not generalized the closing entries so far. So when we are closing the revenue account, we have debited the the service revenue account, and so we have to credit a new account called the income summary account. So you can see that service revenue is debit and income summary is credit, and this entry is done to close the revenue account. So when we are closing, we reverse the rule for revenue. Revenue will be debit and income summary is credit. For all the expenses, salaries expense, supplies expense, rent, each one, when we are closing the expense account, each of the expense account is going to be credited by the respective balances, and income summary is going to be debit. Next, we have to make the income summary account, and we are going to close it to retained earnings. So you can see that here income summary is credited by 10,600, and remember that all these the closing entries are at the end of the period. So end of the period means 31st December. So income summary is credited by 10,600, and at the same time income summary is debit by 31st December, 31st December. So it is 5,200, 1,500. Rather, sorry, on 31st December, the income summary is debit by 7,740. Now, if we, obviously there is a balance, and there is a balance of how much? The balance is 10,600 minus 7,740, 2,000. So there is a balance of 2,860, 800 and 10,000. Oh, yes, 2,860. Now, in order to close the income summary, we have to close the income summary by uh, by by uh, by debiting the income summary account by 2,860, and now you can see that the balance is going to be 0. So income summary is going to be closed by debiting the income summary account by 2,860, and this balance will be transferred to the retained earnings account for 2,860. Now, finally, you can see that another temporary account is dividends. So, dividend is also to be closed, and in order to close the the dividend account, it should have a zero balance. And where is dividends? Um, Dividend has a 1 minute. So dividend has a debit balance of 500. To make it a zero balance, it has to be credited by 500. And so now dividend account is credit by 500, and it will be the retained earning that is going to be debit. So retained earning is debit and dividend is credit by 500. Now, after generalizing, and so that's how we close all the temporary account, that is the revenue account, the expense account, the dividend account. All these accounts must have a zero balance after closing, and we make the closing entries, and the revenue is going to be debit and income summary will be credit. For expenses, income summary will be debit and expense will be credit. Regarding dividends, dividend is going to be credit and retained earning will be debit. So that's how we close the general entries and we make the necessary ledger as such. And after generalizing and posting all the closing entries, yet another trial balance is going to be prepared, what we call as a post closing trial balance. Now, the purpose of the post closing trial balance is to prove the equality of the permanent account balances. Because after the post closing trial balance, after the closing entry, sorry, all the temporary accounts will have a zero balance, that is, revenue, expense, and dividend will have a zero balance. So we are going to ensure the equality of the permanent account balances that the company carries forward in the next accounting period. Don't forget that all temporary accounts will have a zero balance after we record the closing entries. Now, this is the summary of the accounting cycle. First one is, first of all, we are going to analyze the business transactions, and we have talked about analyzing the business transaction in the first video. You can refer the link over here. That is how we analyze the business transactions. After analyzing the business transactions, we journalize, and journalizing the transactions are explained in video number 2 on accounting information system. Next, we prepare the post. We are going to post the transactions to the ledger accounts, and we prepare the trial balance. And posting to ledger and the trial balance is explained in the third video. Uh, this is explained in the third video. After we prepare the trial balance, we are going to make the adjusting entries. They may be deferrals and accruals, and deferrals and accruals have been explained in part 1 and part 2 of the of accrual accounting. And part 2 also includes preparing an adjusted trial balance and preparing the financial statement. And just now we have talked about how to generalize the closing entries and how to prepare a post closing trial balance. So this is how we prepare this is the summary of the accounting cycle that we have completed by this time. Next, we are going to look into the worksheet. Now, in the process of preparing the financial statements, accountants, they employ T accounts and the trial balance to ascertain the necessary amounts. And to facilitate this task, they often use a tool known as a worksheet. Now, a worksheet is a structured multiple column form employed during the adjustment process and financial statement preparations. Now, while accountants historically prepared worksheets manually, contemporary practices predominantly involve the utilization of computer spreadsheets for enhanced efficiency and accuracy. That is how the the worksheet is going to look like, and we will talk about it in a minute. So a worksheet is a multiple column form used in preparing the financial statements. You can see there are multiple columns over here. It is not a permanent accounting record. There are 5 steps involved in the process. You can see first we prepare the trial balance, and we will look into each one of them in few minutes. And now this is obviously making a worksheet as an optional task. An income statement is prepared from the income statement columns, while the balance sheet and owner's equity statement are prepared from the balance sheet columns. So let us see how we do this, and you can see that this is a this is a multiple column form, and that is used in preparing the financial statement. And the first step is to prepare the trial balance on the worksheet. You can see we have a trial balance, we have the account titles, and that is what we do. We are simply using the trial balance that we have used in the previous video. That is, this is the trial balance. This is not the adjusted trial balance. This is simply the trial balance before we have made the we have made the closing entries. So we have the trial balance, and this trial balance is simply I would like to let me. So this trial balance is simply copied over here. You can see we have the trial balance, and all the balances are simply copied down. The debit amounts in the debit column, credit amounts in the credit column, and all the account titles are written over here. And obviously the total for the debit and credit of the trial balance must be equal. So they are coming just directly from the ledger, and you can see that we have included all the accounts with the respective balances. These are the balances for all the accounts that are there. Now, once we have done that, we move on to the next step, that is, we are going to make the adjustments. Now, adjustments have been done again in the previous video, and these were the different adjusting entries that we have done for supplies, insurance expense, depreciation, unearned service revenue, etc. So once again, we are going to use these adjusting entries, and we are going to put these adjusting entries in the worksheet, and let us see how we do that. Oh. So you can see that these are the different adjustment entries we have done. Where there is a adjusting entry for the supplies, there is an adjusting entry for insurance expired, there is a adjusting entry for depreciation expense, service revenue earned, and service revenue accrued. Both of them are there. Then there is interest accrued and salaries accrued. So we have already made these adjusting entries, and let us see how they are going to be recorded in the worksheet. Okay. Now this was from the trial balance, and now we are going to record these adjustments in the adjustment column. You can see over here that first of all we are going to prepare the trial balance, and then we are going to record the adjustment data. So when we are recording the adjustment data, You can see that supplies expense is debit and supplies is credit by 1500. So supplies is there and we are going to credit it by 1500. You can see we have a debit column and a credit column. The credit amount will go into the credit column. Now this is supplies and this is not supplies expense. Now you can see that there are no supply expenses in the trial balance. So we have added a new account, supplies expense, and since this is debit by 1500, we have recorded this in the debit column. The second one is the insurance expense debit and prepaid insurance credit by 50. Now prepaid insurance is already there in the trial balance and now this is credit, so we have recorded in the credit column. Once again we don't see insurance expense, so we have added a new account, insurance expense, and because this is debit by 50, so we have recorded insurance expense by 50 in the debit column. The third one is depreciation expense debit and accumulated depreciation credit, and you can see that neither depreciation nor accumulated depreciation is appearing in the trial balance. So that's why we have accumulated depreciation and depreciation expense both being added over here. Now depreciation expense is debit by 40 and accumulated depreciation is credit by 40. The next one, unearned service revenue and service revenue. Now we can see that there we have one. Now we have unearned service revenue, and now unearned service revenue is debit by 400, so we put this in the debit column. Remember that we have to make all the adjustments in the adjustment columns only. um, then we have the service revenue that is credited by 400, and we have service revenue in the trial balance as well, so we are going to credit it by 400. Next we have accounts receivable and service revenue. Now we can see that there is no accounts receivable in the trial balance, so we are adding up the accounts receivable account, and this is debit by 200, so we have 200, and you can see service revenue is credited by 200, so we have credited by 200. Remember, we have to make all adjustments in the adjustment column only. Next, we have interest expense, and there is no interest expense in the trial balance, so we have added the interest expense, and obviously interest payable is also not there, so both the accounts has been added, and interest expense is debit and interest payable is credit. And finally we have salaries and wages expense debit by 1200. Now uh, we have the salaries and wages in the trial balance, so that's why we are putting the amount over here 1200, and salaries payable we have to add, and that is added over here. Now once we have done these, recorded these adjustment entries in the worksheet, the next step is to verify that the total of the total of the debit and the total of the credit are equal. If they are not equal, then there is a mistake in entering the adjusting entries in these columns. So so remember that if the accounts do not appear in the trial balance, then we have to add those accounts as and when required for adjustments. Now once we have made the trial balance, we have done the adjustments, the next step is to look into the adjusted trial balance, and that is what they have said over here. We have made the adjustment data and now we are going to enter the adjusted balances. Now when we are recording the adjusted balances, we have done the trial balance, we have done the adjustments, and now let us see what we now you can see that cash has only a debit balance, so amount goes in the debit column. If we make the T account for the supplies, obviously 1200 is in the debit and 1500 is in the credit, so the balance is in the debit for 1000, and that is what how we record it over here. Now look at the prepaid insurance. Prepaid insurance is debit by 600 and credit by 50, the same thing. So prepaid insurance, 600 in the debit and 50 in the credit, so the balance is 550. That is what we have over here. For equipment, we have all the amount in the debit only, so we have the debit amount. For notes payable, the amount is credit, for so we just copy it down in the credit column. You can see this is in the credit, so we have recorded this in the credit column of adjusted trial balance. For accounts payable, you can see that again this is in the credit and there are no adjustments, so this is going to be recorded in the credit. For unearned revenue, for unearned revenue, unearned revenue, we can see that the amount 1200 is in the credit and the adjustment is debit by 400. That means the balance is in the credit for 800, and that's what we have in the credit column. For common stock, it is 10,000. For dividends, you can see that we have 500 and we have the this is in the debit for 500, so we simply record in the debit column 500. Then we have the service revenue 10,000. Now for service revenue, we have 10,000 in the credit, so we record it in the 10,000, and service revenue is also in the credit for in the adjustments. So 400 and 200, that makes 10,600, and the balance is recorded in the adjusted trial balance. Next, we have salaries and wages. You can see that this amount in the trial balance is in the debit and adjustment is also in the debit. That makes 5,200. Then we have the rent expense, and let me clean it up. Now for the rent expense, it is in the debit, you can see over here, and this is straight away recorded in the debit for the adjusted trial balance. For supplies expense, where we have in the adjustment only 1500 debit, you can see this is in the debit, so we record this in the debit. Insurance expense in the debit, accumulated depreciation in the credit, and then we have the depreciation expense in the debit. Accounts receivable is debit, interest expense debit, interest payable is credit. You can see both the amounts are the accounts payable has a credit in the adjustment, so when we make the T account for interest payable, it is 50 and the balance is going to be in the credit only for 50. So that is how we have over here, and same is the case for the salaries and wages payable as well. So we have we have inserted the information for the trial balance, adjustments, and adjusted trial balance. Now once we have done the adjusted trial balance, the next step is to extend the adjusted balances to appropriate statement columns. So we have done the trial balance, we have done the adjustments, we have done the adjusted trial balance, And now the relevant information will be recorded in the two financial statements, income statement and the balance sheet. So let us see how we do that. Now we have the um, now first one is cash. So cash is going to be in the balance sheet. First of all, let us see how to record the information for the income statement. For the income statement, obviously we are going to have only the revenues and the expenses, and obviously we have to pick up the information from the, to just keep in mind that now what that now the trial balance, the trial balance is, we have done with the trial balance, so we are not going to use the trial balance information. I would also like to add that once we make the adjusted trial balance, we make the total again, and the total must be equal. If they are not equal, then there is a mistake. Now from the adjusted trial balance, we are going to pick up all the accounting information for the income statement, and in the income statement, we record only the revenues and the expenses, and for this we are going to use the, we are going to use the adjusted trial balance only. And we have the service revenue for 10,600, that is what we have in the credit. Then we have the salaries and wages expense 5,200, and that is what we have. We have the rent expense in the debit 900. We have the supplies expense. So we record all the expenses that are there. Accumulated depreciation is for the balance sheet, so we don't record it. Now depreciation expense is in the debit, and then we have the accounts receivable, that is an asset, we don't record. Interest payable is a liability, so we don't record in the income statement. Salaries payable, interest salaries and wages payable is a liability, so we don't record them as well. Now we have the total income statement, total for income statement is 10,600, and the total for all the expenses that we have recorded is 7,740. So there is a profit, and let us see how we record this in the next sheet. So there is a profit of 2,860, and if you can recall, when we prepared the the closing and journal entries, it was 2,860, that was close, and the same amount is here, so there is no mistake in doing our calculations. So so the net income is 2,860, and obviously this is going to go to the balance sheet as the, in the retained earning 2,860. You can see we are not we have not added the retained earning statement, so obviously this goes straight into the balance sheet. Otherwise this income should be added in the retained earning statement. Now in the balance sheet, again we are going to use only the adjusted trial balance, and we will look into all the assets. We are going to look into all the assets, liability, and common stock. Now we have cash, we have cash, supplies, prepaid, equipment. So cash, supplies, prepaid, equipment, and all these four are recorded over here. Then we have the notes payable and accounts payable, and notes payable and accounts payable. 5,000 and 2,500. Unearned service revenue is 800. This is also a liability. Common stock is 10,000 in the credit. So credit amount will go into the credit side and debit amount will go into the debit side. Just keep one thing in mind, that for all the assets they will have a debit balance, as you can see over here, except for the accumulated depreciation. This is a contra entry, so we will talk about it in a few minutes. Then we have the common stock is already there. Now dividend has a debit balance, and since we do not have the retained earning statement, so in the worksheet we add it in the asset side. Now, other things to be added, obviously expenses we don't expend that record. This is in the income statement. Accumulated depreciation is in the credit, so we record it in the credit. We don't record depreciation expense. Account receivable is there for 200, and this is in the debit, so we record in the debit. Interest expense we don't record. Interest payable and salaries and wages payable are 50 and 1200, so we have 50 and 1200, and this 50 so that's how we record the interest payable and salaries and wages payable. And let me clean up again. So after we have put all the relevant information in the balance sheet column, the total of the assets is 22,450. There was a net income of 2860 that must be added in the credit. And now you can see that the total of the balance sheet debit is equal to credit. So mathematically we have solved this. We have put the information in the worksheet correctly. So this completes the fourth video on accrual accounting. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.